Top headlines for this hour. Well, muted opening for benchmark indices. India volatility index falls further and the Nifty 50 rollovers remain subdued. An open interest surges for Kajaria Ceramics and Tata Elxsi as traders take fresh long positions in their respective September futures. And it's a mixed debut for ICICI Lombard. The general insurer lists at 650 per share on the Bombay Stock Exchange and heads lower versus its issue price of 661. And the new head of Niti Aayog, Rajiv Kumar, unequivocally calls for letting the rupee fall, says the export benefits for that will far outweigh the costs and may even push some real import substitutions.
Well, it's the second last day for the September series to expire. If I go by the current trades, it looks like it'll be a negative return for the September series. We started this series on Nifty at levels of about 9918 and on Bank Nifty we started this at around 24318 and currently the Nifty is quoting at about 9860. You've got the futures which are trading at a premium of almost 14 rupees. So the premium has certainly seen some kind of bump up compared to yesterday. Let's see if there are any fresh longs being built up at current levels, and the Bank Nifty, which has got the support coming at about 24,000 mark, is trading just with the mild negative bias today at levels of about 24,178. So the biggest question today is actually where can the September series expire? If you go by the options data, it looks like that the expiry may happen in that range of about 97.75 on the downside, and on the upside it could be levels of about 99.40. But so far, which we saw in yesterday's session, that the bulls are protecting the 9800 mark, as the 9800 put strike so far has seen a lot of open interest addition yesterday and today as well. If you go by the most active strikes as well, 9900 call and the 9900 put followed by the 9800 put are your most active strikes, and the 9900 put currently is quoting a premium of almost 49 rupees. In fact, looking at the rollovers as well, so far the rollovers have been below the 3-month average so far which we've been seeing, and the FI activity has not been so encouraging, Agam, because yesterday FIs on the index futures, they were net long 72% at the start of the series. That figure has come down to 51%, and yesterday itself they added 10 shorts for every 1 long in the index futures space. So clearly this is indicating that there are a lot of shorts which are sitting in case there is a rally. It could be a short covering rally as well, so a little bit of pullback till tomorrow is expected.
Right. Let's also take a look at some of these movers in terms of big changes in open interest. And today we have focus in on Bharti Airtel as well as Kajaria Ceramics. We also have a lot of movements in HDFC Bank, and Bharti Infratel has also caught up. Actually, it's taken over its larger peer and up as much as nearly 17% in terms of change in open interest. And Infibeam as well is looking at a 10% increase as far as OI is concerned. This is all September futures. In terms of unwinding too, we are keeping an eye on Godfrey Phillips, Gale, Amara Raja, Torrent Pharma and Wockhardt. But two stocks that we can bring focus to. First one, of course, is Bharti Airtel. You know, Bharti Airtel, in terms of open interest change, really hasn't done too much over the last few sessions. But today is a day where we are looking at surge in open interest. We really haven't seen too much in terms of cash volumes either. In fact, its cash volumes are below its previous 20-day average. So something certainly seems to be brewing as far as Bharti Airtel is concerned, especially the fact that the stock itself is flat. The other stock I wanted to address was Kajaria Ceramics. That's again where we have seen a surge in the September futures, and again in a marked fall over the last 6 sessions when it comes to its open interest. Today we see its open interest spike. Rollovers, of course, stand at around 32%, and we'll have to wait and watch as to whether or not we continue to see more volatility in Kajaria Ceramics. Its volumes in cash stand at around 7.5 times as against its previous 20-day average. On the whole, these are the two stocks that we are keeping an eye on, at least going into today's day of trade, Navneet.
For sure. So these are the counters to keep an eye on. On that note, let's welcome our guest for the day, Abhijit Phatak of Define Edge Solution. And also joining us on the show is TS Harihar of HRBV Client Solution. Good morning, gentlemen. Appreciate both of you joining us today on BloombergQuint. Mr. Harihar, would like to come to you first. Where do you see the expiry taking place? Well, 10,000 is the ultimate upside for the markets, but if you look at the options data so far, it looks like it could be in that range of 98 to about 9,900.
Yeah, I would actually compress the range a little further. I would probably say that, 9850 to 9900, I think that could be a very realistic range for this, Nifty to expire. If you look at the writing that is happening on the 9850 strike and on the 99 strike, I think the writing has been quite aggressive. And we also believe that the way the market has corrected in the last 6 days, there could be sufficient short covering support for the market to probably hold it at that particular level. So I think 9850 to 99 could be the kind of a range where we could expect the expiry to happen tomorrow.
Right, Abhijit, I'm going to come to you. Thanks for joining us. Tell us, how are you reading this expiry and what you're making of the kind of accumulation that we are looking at in options around where the Nifty is currently?
Yeah, as I said, 99.20 on the Nifty spot is a resistance which also happens to be the high till now today. And on the lower side, 9800, 98.20 is a support. So I guess for some time Nifty might remain range bound in these 100 points. So it is a good idea to go long at the lower side of the range and book profits on the higher side.
All right, so it could be a good idea to create fresh longs on the lower side. In fact, in the last two trading sessions, the support which the Nifty has been finding is around those levels of 98.13 and the 98.16. These are the two low levels which we've seen in the last two trading sessions. But let's shift our focus to options corner now. And TS Harihar of HRBV Client Solution has a Nifty long straddle strategy. Before I go to him, let me explain to our viewers what this strategy actually means. A long strangle is when one buys an out-of-the-money call and an out-of-the-money put in anticipation of increase in volatility, while the strategy becomes profitable when volatility increases, followed by expansion in options premium. Mr. Harihar, take us through your strategy.
Yeah, the way the strangle on the Nifty will work is that we are suggesting to buy a 9,800 put option and simultaneously buy a 9,500 call option. What we are betting on is not so much the Nifty breaking out of this range, but what we are actually betting on is the volatility, as you rightly said, to go up sharply between today and tomorrow. And this is a very short-term strategy, bear in mind. It's just about 2 days. It has to be closed by tomorrow. So we expect the volatility spike to happen by at least about 10 to 15%, which could give about a 20% return as far as the overall strangle strategy is concerned.
Well, the volatility index for now currently stands around the mark of 13. So, we'll be keep watching out for that. But moving in, Abhijit, if I can take your option strategies as well for today and for the expiry, how would you play options on the benchmark indices?
Yeah, like I said, for Nifty, when it comes near 98.20, 98.30, it's better to buy a 9800 call and book it when Nifty goes back towards 9900. Of course, the stop loss will be 9800 on the spot on Nifty. So that is something which you can do on one side. This might be only for today and tomorrow. I mean, this is only for the expiry.
All right, so the strategy is only applicable for today and tomorrow when the September series expire. Just a word of caution there, the VIX has actually gone up by 2%. We were just flashing that on the screen. India VIX, which cooled off yesterday, is once again trading at those levels of 13.23 with a gain of about 2.5%. Let's also look at a couple of stock futures then, which are buzzing in today's trading session. I just want to mark Shriram Transport. That's the biggest F&O gainer today. That stock's seen a gain of almost 4% after that news came about that the company and the IDFC Limited, both the groups, are reworking on their deal, which they had announced earlier in the month of July. Shriram Transport futures have seen an uptick. Open interest has gone up nearly by about 3.5%. Mr. Harihar, would you recommend taking any positions here?
As a trading bet, yes, though I'm not too sure what it means over a 3 to 6 months perspective. I think the very fact that the Piramal group is reconsidering the merger ratio, I think it means that there could be a merger ratio that is more favorable towards Shriram Transport. There was a concern that the merger ratio was skewed in favor of IDFC, but I think with the expectation that it could now be a little more favorable for Shriram Transport, I think it makes a good short-term bet. So probably buying of September or October futures could be a good way to participate in that.
Right. The other stock, of course, which has been focused over the previous 3 to 4 days is Infibeam. Infibeam has now out of its F&O ban, and we are looking at a surge in open interest not only in the September futures but also in October futures. Abhijit, if I may come to you on this one, we've been getting a lot of questions about what to do with Infibeam. What would you advise a lot of these traders to do? Stay away or initiate a longer short in this counter?
Yeah, Infibeam gave quite a wide range a couple of days back from 130 to 87, and after that it is stuck in a range of 125 to 115. 135 to 115. So they can play this range of buying near 115, 120, and for about 10, 12 rupees. But unless it breaks out above 135 or goes back below 110, a positional bet is a bit risky in this.
All right, this has been quite a volatile counter, Infi being just about trading flattish today. Let's talk about the new kid on the block. ICICI Lombard has had a rather muted listing opening, lower than its issue price of almost 661 rupees per share. Saloni Dhanuka, who tracks the sector very closely, is joining us with more details. Well, Saloni, no surprises there because the street was of the view that the valuation, the issue price was actually on the higher side at 661. The PE was 40 times and the price to book was almost 6.5 times.
So Navneet, the IPO actually listed below the issue price, and given the discount, the price to book is actually trading near 7.9 times, considering their market capitalization of 29,900 crore. Now, in the same lines, we are in conversation with Payal Pandya from Centrum Wealth, who closely tracks the sector, and we'll be talking about the IPO with her. So, good morning, Payal.
Hi, good morning.
Yeah, so given the expensive valuations of ICICI Lombard, according to a lot of brokerage notes, what according to you are the growth drivers for ICICI Lombard going ahead?
See, basically, they have a good business model when it comes to their industry spread. Like you must be knowing, they are one of the highest market share in the private segment. So, well, to grow their business, yes, they have a decent scope there. What we must also consider is that if you have to look at the combined ratio, which is 104%, and that is almost in line with other private players. Of course, this is higher than Bajaj Allianz. If you have to see there, Bajaj Allianz has a combined ratio of 97%. But what is a little worrisome is that ICICI Lombard has a loss ratio of 80.4%, while Bajaj Allianz and say, for example, HDFC Ergo or even Tata AIG, they have like sub 75% ratios. So this is where they will have to improve. But overall, ICICI Lombard has a decent investment asset of 15,000 crore plus. They have investment leverage of 3.9 times, which is in line with several others, and a decent ROE of 20.3%. So going ahead with their kind of market share, they'll be able to grow well.
And Payal, what percentage of the premium is collected by the way of reinsurance for ICICI Lombard?
I didn't get your question.
So what percentage of the premium collected by the way of reinsurance for ICICI Lombard?
That I'll have to check that.
All right, and also you touched a point on combined ratio, which is a little over 100%, and to be specific, it is 104% for ICICI, which clearly indicates that the company does not make any income from their premium collected. However, they completely rely on their investment income, and the company actually invests roughly 15% of their investment assets into equities. So, according to you, do you think the company has the capability to give higher returns as compared to the risk that they are taking?
They do have the capability. If we have to see, even if we evaluate their investment in equities, one thing is for sure that equity markets are pretty volatile, and at the same time, in a country like India, which is in its growth phase, equity markets also will participate. So in the long term, if you have to evaluate this, it is going to be beneficial for the company, considering they have expertise, they have some of the best people on the board, and they have a very strong parentage. So they will be able to manage it well going ahead. At the same time, it's not only equities. They are also investing in other instruments. So yes, they will be able to manage this.
currently recovered, is just about trading flat to positive at levels of about 662. Tell us what is actually left for the investors who had subscribed into the IPO. Do you think they should exit because the valuations, they seem to be on the higher side? Or if one has to take a bet on the non-life insurance business, they could just directly buy ICICI Bank?
I don't think it is a wise idea to exit it because in any case, ICICI Lombard was not a stock that would have given listing gains or something of that sort. But it is a good story from the long-term perspective since its hold on the market is decent. So, well, people can hold it from a long-term perspective and that will fetch them returns.
Okay, well, thanks for that, Payal, for taking us through your views on ICICI Lombard. Payal does suggest that from a longer-term perspective, it certainly is a very good bet. But moving on, it's time to address the queries of our viewers. Our first caller is Samyak Gola, who is calling us from Varanasi. Hi, Samyak, thanks for joining us. Tell us, what is your query?
Actually, I'm long on one lot of DHFL September futures at rupees 550. So what would be the better, to close the position or should I roll over to the next series?
Well, I'm going to come to you on this one, Mr. Harihar. He is long on DHFL and he's bought it at 540. What does he do?
See, firstly, I think the price point is fairly okay. I wouldn't say it's great, but it's fairly okay. Let's not forget that DHFL corrected from about 620 down to about 520. So I think, there is a certain comfort that he has in terms of the margin of safety. I would believe that, considering the kind of a potential that housing has, considering the positive financial profile that DHFL has, he should actually look at, bearing the rollover cost and rolling it to the next month. He stands a very good chance of, getting a profitable exit in the next month.
Mr. Harihar, if I may add a question. Diwan Housing is currently in F&O Bank, if I'm not mistaken.
It is.
What does one do when it comes to rollovers? Because again, there is a lot of confusion about rolling over when a stock is in the F&O Bank.
See, I think there is a possibility wherein you can take a special permission to roll over, where, there is a simultaneous rollover you can do wherein you can close the old and initiate the new at the same time. That does not change the open interest.
Right.
The whole worry about the ban is the open interest should not increase.
Right.
So when you roll over, the open interest doesn't increase. But technically there is a problem. So I think there is a way out. You can actually, the broker can help you do the rollover without, getting into the F&O ban issue.
Right.
And still, if you take that position and you roll it over, there's some fine which actually the exchange levies, is it?
No, not for a rollover.
Not for rollover, but otherwise if you take a position.
If it's a naked position, then
Yeah.
yes, there is a penalty that the exchange levies.
All right, that's the call on Diwan Housing, a counter which rallied after coming out of ban yesterday, almost 4 to 5% gains. But once again, it's back into that F&O ban. Trading at those levels of 543 is the September futures rate. Let's go across to our next caller then. Ridhima Merchant calls us from Goa. Hi, Ridhima, tell us what's your query on.
Hi, I'm long on one lot of September Nifty futures at 9825. At what level should I cut my position?
All right, Ridhima has one lot of Nifty September futures at 9825. She wants to know should she cut her position. Abhijit, what would you recommend her?
Yeah, you can hold this position with a stop of 9800 on the spot. And when it goes above 9890, around 9900, keep a watch on the October Nifty futures. If that crosses 9940, and also keep a watch on the 9900 call of September. That also, high of that has been around 40, 41 yesterday and today. If that is crossed, then I think your futures will be safe and it might even go to 10,000. But if that is not crossed, then you have to book around 9900 there.
There you have it. That's the call on your particular position that you have. But before we wrap this show up, let's also take a look at what our experts are saying and in terms of strategies that can be employed going into the next 3 to 4 sessions. Mr. Harihar, you do have a call on Tata Motors. Can you take us through that?
Yes, I think we are positive on Tata Motors, but then we would still advise to build a certain amount of caution into that particular call. So what we are recommending is to buy Tata Motors October futures, because we're already in the end of September series. So buy Tata Motors October futures and protect that by buying a 400 Tata Motors put. And we have a target of 440. So I think you can afford to actually pay that put premium. So I think that will protect you on the downside. So stop loss is not required. And on the upside, it still leaves you sufficient margin to make money after considering the option cost.
Okay, that's a call on Tata Motor futures, which Mr. Harihar is advising. Take a long position on the October futures, and to hedge that, you can buy a 400 strike put for that position. But Mr. Abhijit, what are your trading strategies for the day? I see Infi is there in your list, and if I look at the stock rollovers, the rollovers for Infi have been on a higher side.
Yeah, Infi is, I mean, this is just a trading bet for a couple of sessions. If it, on the futures, it will show a small breakout above 914. And to trade that breakout in anticipation, one can buy a 900 call at these current levels around 8 or 9 with a stop below 4.
All right, so that's the view coming in as far as Infosys is concerned. I do want to bring focus to one other stock in today's day of trade, and that is, the one which is leading the Nifty. That is Ambuja Cement. In fact, the entire cement pack is quite active in trade. Mr. Harihar, once again, anything that stands out for you in the cement pack, considering the fact that two of these stocks are leading the Nifty right now?
See, we have a broad concern on the entire cement pack as far as valuations are concerned. If you look at the EV by EBITDA, or if you look at the the price per ton that you would to pay to buy a cement stock, most of the cement stocks are looking overpriced. Probably, I think a Shree Cement, notwithstanding the price at which it is quoting at, probably looks to be a good cement bet. But other than that, we are not too positive on the cement space as a whole.
In fact, the entire cement space is going up after Nomura's report, where they've gone bullish on the sector, saying that they do see some sort of revival in the housing and infrastructure space, and the beneficiary of that could be the entire cement space. And I think Shree Cement is one of their top picks too. On that note, we would like to thank our guest, Abhijit, as well as Mr. Harihar. Thanks very much for joining us today on our show, giving us your views on the markets, and also helping out our viewers with their queries. With that, it's a wrap on this edition of the F&O Show. Thanks very much for watching.
But of course, keep watching BloombergQuint because Ask BQ is up next at 12:30 p.m. Stay tuned in.
Are we live?